Hey guys, good afternoon, good day, beautiful people. All right, listen, blowing accounts. I've blown so many accounts in my life. It's just ridiculous, right? I could say probably over 12 accounts have been blown. Trading is really not difficult. Really not. In fact, it's one of the easiest things. But what is really difficult is managing your emotions. You already heard it. If you listen to this, you already know that you've blown many accounts. You have seen yourself make good money, and then maybe a week later, you wipe out all your gains. You've seen yourself maybe have a $400 or $500 day or more. By the end of the day, you've overtraded and you walked away with just $100 profit when you had 500, maybe $1,000 at one time. This happens to thousands and thousands of traders every single day. And then it becomes addictive. It's because you see the type of money that you've made. You see that others may be killing it around you. But what you may not see is the person that made $50,000 on a trade. Did you know that possibly last month they lost $200,000 for the month? They're playing with bigger capital. So with the bigger capital, you're now saying to yourself, wow, they're killing it. I want to go do the same, but we don't know the transparency because I know a lot of people who kill it, but when you look at their P&L, you're like, whoa, you're taking a lot of drawdowns, you're taking a lot of big beatings. You just had a nice run, but overall you're still down. And if you take the whole body of work over the last maybe decade of the trade career, the question is, they may not be as profitable as you think. So in this video today, basically what I want to do is just show you my mindset during the times that I've blown my accounts. And I'm just going to stay within reason. And most of my accounts have been blown on the US dollar, Canadian dollar. I got a love hate relationship for US dollar, Canadian dollar. It does me good. And then I mess it up. I'm not going to say she messes it up. I mess up. So you got to look at this like a relationship, and you're dating or you're married to or whatever. We got a communication issue. I want to go do something. She wants to go do something else. So sometimes you got to approach your trading just like that, as if you're actually dating, and you're going to see what I'm talking about. All right, so I'm on a 30-minute chart, and we're going to look back at this time right here. And essentially, I might could just do a bar replay. Back to this point. Let's do this. All right. So, me, for the most part, I say to myself, all right, we got a nice little run up. I know that it's gonna drop. It has to drop now. All right. So we get a nice impulse. So I'm like, yeah, I'm ready now. I'm gonna short this. I'm gonna get in. I'm gonna go short. All right. So I'm in. Ooh, I made a great decision. All right. So we're in the trade. So I'm in when this bar was engulfed. So we're down 50, 51 pips. So maybe I'm in a standard lot size, maybe a $3, $2 lot size, whatever. I'm up a couple $100, right? Now, I'm thinking I'm gonna hold because I know if I hold, no matter if I go in drawdown, I'm gonna hold and this thing is gonna drop. And this is my rationale. If I hold and I can get down to this area, and I'm thinking, let me run my Fibonacci extension tool retracement tool. And I'm thinking, oh, let's get down to the golden ratio area. I'm going to be sitting pretty. So we're talking about potentially how many pips from there down? About 330 something pips. So I'm like, hey, I'm game. In fact, I'm going to add some more once it really clear this area, right? So let's keep it going. All right, boom. Drop some more. We good to go. I'm genius. I'm up great. Killing it. Where are my stop loss? It's up here. Now, I've moved my stop loss into profit. Okay. So I normally come back up here to this market structure area right here. And we can go on a higher, we can go on a bigger screen for you guys. So I'm like, hey, I'm gonna put my stop loss on here. So if it come back and hit it, it's fine. And I'm gonna look for entry to go back short. All right. Boom. What happens? Stop loss hit. All right. We banked. So, we got in right here. So we got out about right here. So that's 33 pips. Okay, we good. $300 book. It doesn't matter because I know I'm going to go back short. I'm going to get back in. It's going to give me an entry to get back. And I want to see if price can get back up into this area. And if it do, I'm going to look to possibly go short again. All right. What happens? Price came back up here. All right. It didn't get all the way up in here. But this is what's going to about to happen. All right. Let's go. Now, boom. We got it. Now let me take off my indicator so it won't be popping up on here. Let's take them all off. All right. All right. I'm in. I know it's gonna go right now. I'm trying to stretch this out for you guys. Make it bigger. Here we go. Make it a little bit clearer for you guys. All right. So I'm like, okay, we back in this area. Got a little small little rejection. Then now check this out. I'm not using any true rules based. I'm anticipating. So before we go further, most of my losses, 90% of my losses, the big ones, is because I'm anticipating instead of actually allowing something to play out. It's almost as if you want to be so greedy that you got to have the perfect, or you got to be so early instead of letting it develop. Sometimes you need to let something develop, and it may take 10, 15, 20 pips for it to move into your direction before you even decide to get in. And the greed would say, nah, I'm wasting pips. Like, I need to get in now. So I'm in now. All right, we get a good move. I'm a genius. And I know we coming down now. I got a great entry. I already secured over 300 something dollars. I'm good in. All right, I got in right here. All right, so we now I got almost another $300 on my plate. I'm good. Okay, I'm good. Where my stop loss? Above here. Keeping it moving. Now I'm in drawdown. So what do you think what I'm thinking? I'm like, okay, this area was what? Imbalance. Why? All right. This candle cleared this candle. We know imbalances cause the market to move. So clearly a lot of sales came into the market, or sellers, and they won. It took the market down. So what do you think I'm thinking? I'm thinking, well, this almost like maybe a double top for me. Maybe this is going back to the supply area. So I'm going to hit the sell button, and I'm already in drawdown over here because I entered over there, and I want to enter a second position. Rule One of the rules is never add to a losing position. Well, guess what? I'm about to add to a losing position. I was in profit. It went against me. All right. Now I'm going against my rules. All right. So like, okay, it should drop now. It should drop. I'm a genius. All right. We good. All right. Now I'm almost back break even. I'm in a little bit of profit. Because it's a little bit down from where I entered in. I'm back to a genius. I'm really smart now. Just a retest. I'm like, they just clearing out some of those. I'm gonna hold on. Now I'm in massive drawdown. I'm back right. I'm good. I'm genius. Now it's in the just. I'm like, it's just doing this thing. It's gonna come back. It's just retesting. It's gonna, and we're gonna have this massive drop to the downside. I know it's coming. I know it's coming. All right. So I'm still in drawdown over here, because of my entry, but I'm ping ponging back and forth. Now I'm in drawdown on both. All right, now this is what I say. So this stop loss gets hit, but I still got this order in. All right. So what will happen? You're gonna be like, all right, because with this, typically, if I edit this, I want put in a stop loss maybe. I might say, hey, let me just free flow. Let me just see what's going on, because a lot of traders believe in stop loss hunting. Whether we can prove it or not, who knows? We do know that once you put an order in, there are orders all over the chart that's sitting there. So yeah, you possibly could be sitting there in a liquidity grab. So that could happen. All right, we get a nice little rejection. I'm like, okay, they're just wiping these jokers out up here. I'm good. So you know what I'm going to do? This one that got the stop loss. Oh, that's okay. You think you slick, right? I'm gonna add another position up here, and with this rejection, I'm right. Right? I know I'm right now because I know when this happens, it's just a liquidity grab, and then you go and you look for confirmation bias by going to see where this has happened in the past with something like this. All right, you see it, we came down, we came back up. All right, this one came a little higher than this. And what happened? We then take a fall. So what do you think I was probably thinking over here? Like, okay, we up here, we're going to make this fall, and I'm going to make a killing. Once again, I'm right. We good. You went profit. And then now you're saying, oh, it gotta drop. So I'm gonna add me another position. And you get teased. You get the okay, I'm good, I'm good, I'm good. And you just switching back and forth. All right, you see what's happening. Now, every time you set your stop losses above the structure, now it's starting to get hit. And then what happens? It drops, and then people are jumping back in, say, okay, now it's gonna go to short, and they're getting whipsawed. So all this little movement right here, now you're you're in severe drawdown. You may be ready to blow your account, or you just taking a severe big hit. Okay. So one way I trade is that I have multiple forex accounts. So and they got different values in it. So some so in if I'm gambling, sometimes I have an account I just gamble with, right? And I'm like, I'm willing to lose like $1,000 because I'm possibly could have made 11,000, something like that, right? Well, that's just my strategy. I got because I know I'm human. It's certain times I do want to get risky, so I do that. And this is one of the accounts where I wanted to get risky and I wanted to see if I can make some big money on a drop. Now, my other accounts, I might be very conservative and I may be very, very, very rule based. But even with this, it's still the mindset, still the same. And a lot of people trade the same. They keep adding to a losing position and they keep participating and saying, wait a minute, nothing was given to say that this was really clearly short. Even if this was the one that clearly showed that it was short, we still look left and we're back at market structure area where this is where price left out and we got that. Okay. So even if price did come up here and hit your stop loss, it's okay. It hit your stop loss. That's it. It's gonna happen. All right. We play a game of probabilities. If it hit your stop loss, it hit your stop loss. Keep it moving. But your stop loss should not get hit and it devastates your account. It takes massive blows. Then you're gambling. Keep it going. All right. So whatever capital is left, you see this drop. Okay, it's ready now. It's definitely ready. So if I'm thinking that, other people would be thinking that. Okay. This is anticipation does this. Now that's my flaw on this one. But why don't I do that on the other accounts? It's weird, right? So when I'm gonna start doing this, I'm not gonna use this train of thought on these accounts that I use for risk taking because it makes no sense. There's no reason to blow this money. Why? Just because I have it don't mean I need to. But that's where the sloppy behavior comes in at. Because you may have access to a lot of capital. You may have, I don't know, some of you may inherited some money. Somebody may gave you a lot. You may have a big tax return and you feel like you could just have something you can blow. And typically that's what happens. Right. So when people come in and want to trade in these markets, some of them are doing it because they need money. Right. They need to they want to they want to leave their job so bad. They're like, hey, I'm gonna just become a day trader. I'm gonna trade, and some of them do very well, but they wind up over trading, blowing it, and now you got to stay at your job for another 5 years. You got some people come in with a bigger amount, and then they get reckless because they know they have a lot of money they can just burn through. I've been there. I've done all those. Look what's happening. All right. It just keeps pushing higher and higher and higher. And this is how people blow their accounts. They keep anticipating. This is not giving us a true. All right. Now I'm gonna show you what a true signal would have been that still went wrong, but you would have been safe. We had this drop, we come back into this. This is what we call this supply zone. This is as best you can get. That what are we gonna do? We're gonna take this, we're gonna take the trade. Now we can be up. Now you have to be careful. I don't know your profit targets, but I have rules. Like if I'm in that much profit, I'm taking something or I'm moving my stop loss into profit. Okay. That's what we're doing. So if I'm entering here based off of, hey, this is a supply zone, I'm going to take this short. I did it. We move, we're good. I move my stop loss to the profit. It gets hit. It's fine. What is the next rule? The next rule is we want to do this. We want to see this structure area right here, support level. We want to see it violated. Now the aggressive can see it violated and take it, or you can wait for what? A retest. So it will look something like this. Break, retest, then we start making our way down. That's that's more of a better indicator. But even if we did take this trade right here to go short, once again, where's the stop loss? Above here. If you do not move it into into profit, it's still here. So look what happens. Your stop loss get hit. You took the L. That was it. You didn't even enter on this one. You just waited for it to come back to supply zone. With our trading style, that was it. So yes, if two traders was trading this, one says, "Hey, I take the trade based off it coming out of supply or re-entering into the supply zone," and I put my stop loss above. All right. The other trader, same thing. I want to take supply, but if it moves in a profit, I move my stop loss in a profit. The other trader may say, I leave mine as is and I let it play out. All right. One of them, both of the stop losses get hit. One is in profit, one is not in profit. They still move on. There's nothing else right now to do or trade. Nothing says short. If anything, we can say, hey, maybe you can look for some longs. But what happens is we get stuck on it has to do this. It has to drop. It has to drop. Look what continues to happen. I'm like, this is way overextended. It gotta drop. And then we start getting in here then, and guess what happens? Sometimes people start jumping right back in and say, oh, now it's definitely time. Just let it play. All right. So you see what happens. Look at all these traders that got in right here. So a lot of people short. All right. But with all these traders short, if you're looking to go short and sell, then you gotta ask, well, who was doing all the buying? And the institution was doing all this buying and it pushed it up, kept pushing up because there was a lot of sell orders all in this region anticipating. Right here, you get somewhat of an awkward depends on your standard deviation of what you have, but you of your measurement. But what you have right here is a double top pattern, right? It showed up, and we get the drop. Okay, now this drop down here is pretty good. Somebody who was trading this correctly may have caught this one, and it went right. That's 225 pips on this drop. That's not bad. Where did stop loss go? Above here. So they're good. So remember, you took the L right here, but then you got it right there. What would this be? Your stop loss would have simply you in this area. You got it right here. So we're talking about. Look at that, guys. Let me do this one more time. Now we're getting back in the middle of this. Right above. You're talking about a 15 pip. So if we was doing a standard lot size, you're talking about $150 loss. But over here, you can make back almost $2,250. We'll take that. That's a really great risk reward ratio, right? So yeah, you took the L over there, but because you're so greedy over here, you just kept adding, and kept adding short, and it just kept going against you. And even here, you get this. It's like, okay, so what do we want to work on? We want to work on this. You work on being patient. Hey, if price comes back into these areas, I possibly be looking for shorts. You get it right here. Now you get up here. What happens? You went short again, but you have your stop losses above here. Now this one looked like it tried to get there and pierce it, but I don't think it quite made it. Let's see where we at. All right, but you have to respect that. Hey, it's close. Now this one, we might as well go ahead and say it hit. Especially if this is the end of the day, you never know what market. This is on a Friday, so it closed on a Friday. You never know. Your spread could have hit it or whatnot. But even so, let's take this. Let's say you went short here, and your stop loss is up 44 pips. And if you're doing a standard, you just lost $444. Now, let's just use flat math. Let's just say that was 400 and the other one was 150. So you lost what? $550, but you won 225 in that particular session of those three trades. So you lost two trades, but you won one and you're still profitable. You got to learn to live with that. But it makes no sense to continue to add on these losing instead of saying, hey, let my stop loss get hit. Let me get out early. All right. You can see You can see a play clearly not turning, not going into your favor, and you say, well, "Look, let me just cut my losses short and get out. I'm done." I remember back in 2017 trading this, and I'm gonna go to a daily chart, and I'm gonna show you exactly what happened to me back in 2000. Was it 17? Let's go back and clear this off for you. Let's go all the way back on another run up, and it's another. Oh, it gotta come back down. That come back down shit getting stupid. Was it this one? Nah, it wasn't that. Let me see. 2007. Was it? Where we at? Was it here? Yeah, it's in this area right here. Look at that. Oh, 584 pips. What was I doing here? Oh, it gotta go down. It gotta go down. Look at this. Just get ate up. It gotta go down. And then what happens? It goes down. And then now you done tore yourself up. You're out of the game, you know, blew your accounts or whatever. Yes, look, most retail traders are correct. Listen to me. Most retail traders are correct, but most retail traders are early. If you can change that, you will change the game. When we go look at sentiment reports, we go look this up for y'all. Look at the sentiment. Okay. On this sentiment, all right, you got the Euro USD. You got 62% are bullish. And the New Zealand USD, you got 77% that are bullish. What's another one? Look at this USD JPY. You got 81% that are short, and you got 19% that are long. And let's go look at the USD JPY. And that sentiment is based off the daily chart as well too. Let's bring this down for you. Let me go to auto. All right, cool. Now, this is a daily chart. And what do you notice? If anything, we can just go back to the 1, 2, 3, 4, 5. All right, so this was a Friday. So this was a Monday, Tuesday, Wednesday, Thursday, Friday. Yep. So on a Monday, all right, we got nice bullish pressure, and then we started going sideways. And but you know that these candles have a lot of pip action in it, and we can come here up to here. So this was about a 62 pip move on a day on that Friday. Well, why 81% are long? With 81% alone, that means that 81% of those sellers just provided liquidity for who? The market makers. You just you just sold something that they need to buy. So they're gonna buy. But the question is, why are they buying? They're buying to be able to sell back to you at a later date. Okay. So this candle don't seem like much because we're on a daily. But guess what? They You sold the retail. But guess what, retailers? Because you are 81%, you guys are correct. You're just early. The dollar will get weaker, the Japanese yen will get a little stronger, and we will have a massive correction. And we want to see a massive correction so that we can get our equities going again and we can get our crypto going again because we need that dollar to be weaker. Well, guess what? It's going to shape up to do that, but you're just early. What do you when people say, "Oh, Bitcoin going to the moon, all these cryptos going to the moon, Sheeb Inu going to the moon, we're going to be rich"? Yeah, but not now. Maybe in the future, and by the time that future comes, majority of the retail traders will be drowned out. They won't make it. It's only the few who understands the game that will make it. So our job now is to stop anticipating, start seeing what it is, and silently build on the back end and be patient for these things. While people are screaming to the moon, we need to be going to the room and sit down to prepare for a onslaught of selling pressure. Is because if you think that something's going to the moon, that means your buying pressure is now entering the market. There's a lot of you guys doing that. You guys are correct, but you're either too early or sometimes, and a lot of times you're too late. So we want to be the opposite. If we know the retailer early, we should not be looking for buying. We should be looking for selling. And then you flip it over. When they're late, what are we doing? When you're late to the party, here, you can have this. This is the rest of it. You've missed the move. It's over. It's done. Here, you can have the rest. So take that in consideration. Remember, trading is easy. Our mindset is what we got to conquer. So doing this video, going back in time, just showing you my mindset. I've identified my problems. Whenever I will blow an account, I identify my problem. My problem is I anticipate instead of letting it come to me. I am a football player. Not currently, but I played football. So we have to use a lot of instinct, but we also have rules. If you do this, I do that. If you run here, here's my run fit. Here's my this is my responsibility on pass plays. This is my run fits on run plays. Whatever, right? But if I just anticipate and then just all of a sudden just jump and just go defend the pass and then they just run it down our throat, the coach is gonna be like, "What are you doing?" I'm like, "Well, I thought well, ain't no thing. You just react to what you see." We got rules in place. If I make a mistake, I have a safety behind me, or I got a fellow linebacker to my right or left that they can make up for whatever mistake I've made. So that's what your stop losses are like. That's what some of your you need to know how to manage your trade, your trade wise in there. You may say, you know what, this doesn't look right. Let me cut this losses. Let me add here. Maybe I can hedge here. It's a lot of things you can do. Your emotions, your mindset will determine whether or not you're going to be a successful investor or trader, or even in business. It's just that most people fail in this profession is because they do not attack the mindset. They don't do the personal development. They don't see it for what it is. It's not the market that's going against you in a way that you think. It's you going against you. If you can conquer yourself, you're going to kill this game. All my losses had nothing to do with the market, but everything to do with me. I used to blame the market. You cheating. You knew it was supposed to drop, or you knew it was supposed to go up. There ain't no way. Nah, it's on me, bro. It's on me, brother. It had nothing to do with the market. Because if you got the right risk reward ratio, you can lose 80% of your trades and still be profitable. But we never get to the 80% if we lose. That's the worst case scenario. We never make it there is because we can have reverse. We can have 80% win rate and 20% can wipe our accounts out because of the risk reward is off, which means your mindset is off. You're gambling. If you need the money, I wouldn't come in the markets for money. Go get a second job. You need to perfect yourself. Be consistent, be disciplined. And then over time, this would be a print machine. Then you can start increasing the risk, being more aggressive according to how you've grown your account and how you have grown as a person. Time after time, people start out small, they made it, they did good. Instead of adding in the appropriate allocation of funds to justify whatever lot sizes or type of position sizes they're taking if they're doing options or stocks, they think that they can get away with the not being properly capitalized. And what happens? If you take an L, it takes a big chunk out. So you got to scale up appropriately. I tell you before, take every trade as if you're going to lose 100%, and then that'll determine whether or not your position size, your lot size makes sense. Can you really live with saying that, hey, I'm willing to lose $1,000 today? And then if you're shocked that you did lose 1,000, that's on you, because you should have addressed that before you even took the trade. If you're not willing to lose $1,000, then you need to adjust your lot size, your position size, or whatever you're trading and doing. And you need to set, hey, I'm going to lose 100%. If you think if you know you're going to lose 100%, the question is, what are you willing to lose if you're going to lose 100%? You want to lose everything, or maybe 2%, or 1%, or 3%? All right, so I'm done with this video. Hit the like button, subscribe. All right, this your boy E White. Go check me out. You can go visit the website over here at darkhorsecoins.com. So look, become the investor they never saw coming. All right, it's your boy E White. I'm out. Peace.